David, are you there?
Hello. Hello, I'm David Mandy, President of O&M Partners, and I want to welcome everyone today to the BonTerra Resources Town Hall webinar. BonTerra Resources trades under the symbol BTR on the TSX Venture, and they also have an OTCQX listing, which is the symbol BONXF. For those new to these broadcasts, O&M is we're non-deal marketers. We're not commissioned. We're simply a communications company. We work with the mining industry, and our job is to try and boil it down to generalist investors, so this information is easily accessible. The questions in Q&A are for everyone. This broadcast will answer questions you didn't know to ask. Questions will be easily answered by going to the question portal of GoToWebinar. You can also email us. For any questions that remain unanswered, be assured we'll get back to you in a timely manner. For those who dialed in with your phone, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. That's not possible. You'll be able to hear the main presentation after 10 minutes. So please stay tuned. Today, before we turn to our host, I'd like to introduce our introductory speaker today, Peter Kraut, who's the editor of Silver Stock Investor and Gold Resource Investor. Peter's a former portfolio advisor, 20-year veteran of the resource market, special expertise in precious metals, mining, and energy stocks. He's been the editor of a widely circulated resource newsletter, contributed numerous articles to Kitco, Bloomberg, Financial Post. Peter holds a Master's of Business Administration from McGill University, and he's headquartered in resource-rich Canada. So without any further ado, here's Peter.
Hello, everyone. My name is Peter Kraut. I'm a precious metals and mining analyst. And today I'd like to talk to you about why your portfolio needs gold and gold stocks. So the key to understanding gold and gold prices is real rates or real interest rates. The real interest rate is simply the interest rate less inflation. When real rates fall, gold tends to rise. And real rates have actually been falling since late 2018. This chart here actually compares the real interest rate, which is the red line, with gold, which is the blue line. And as you can see, they're quite negatively correlated. So whenever real rates are falling, gold tends to rise. When real rates went negative, in fact, gold started to explode higher. That last rally in gold, like I said, started in early 2020, and then it actually exploded higher as the Fed expanded its balance sheet. Right now, we're in an environment where money printing has essentially gotten out of control, and it's been getting worse. The 2008 to 2009 financial crisis saw the Fed's balance sheet double. That's that first red circle down here, from $1 trillion to $2 trillion. Eventually, in 2014, we had a shift from Bernanke to Yellen. The Fed's balance sheet at that point started to rise again, went from $3 trillion to $4 trillion. The Fed balance sheet that between late 2019 and currently has gone from about $4 trillion to $7 trillion, which is a huge jump. And of course, a reaction mostly to the COVID pandemic means we certainly expect that money printing will continue in a very marked way. So what's happening with gold? Well, essentially gold is in a consolidation phase. It's waiting for the next catalyst. If we look at the big picture, the US dollar is more than likely in a new secular bear market. It had been rising from about 2008 to early 2020. That's when it peaked. People flocked to the dollar temporarily during the crisis in March. And since then, it's been dropping quite steadily. It looks like it's entered a new bear market. In fact, it broke below a rising trend line, and that certainly to us signals a new secular bear market for the dollar. Since April, the market has been factoring rising inflation. And we know that rising inflation combined with near zero rates, which the Fed has promised, is a perfect formula for us to get negative real interest rates. And that's a perfect environment for commodities and precious metals, gold and silver, to continue to rise. So what we have is the Fed. They've promised that low interest rates will continue. We've got the federal government on a massive fiscal stimulus binge. They've been sending support checks out. They will continue to send support checks out as people are forced under lockdowns to stay home. Biden has promised huge green energy programs, huge infrastructure programs, certainly in the trillions and onward. And as we know, gold is the ultimate safe haven to this kind of crazy money printing and spending, and it's certainly sensing the inflation. Since 2018, gold is up by 54%. Gold stocks as a whole, as a group, are up almost 100%. And we know that gold stocks offer easily 2-to-1 leverage over gold. Often they offer even better leverage than 2-to-1. Many times, especially in a bull market, they can do somewhere upwards of 3-to-1 and better. So on a fundamental basis, we know that gold and silver stocks have been becoming a lot healthier, in fact. If we look at this chart, this plots the repayment of debt by the sector versus the free cash flow. So the right-hand red bar tells us that gold and silver producers have just completed their largest repayment of debt in their history. And the white line, which shows their free cash flows, have been exploding higher, which is a perfect storm combination for profits and strength. We know that, in fact, the last quarter was the highest ever free cash flow quarter for gold and silver stocks. And you have to wonder, is this what Buffett saw? Is this what Buffett forecasted when he bought Barrick back in July? The combination of rising gold prices along with very clean balance sheets by gold producers. And as we know, when gold producers get cashed up and have been depleting reserves, they tend to start to look to acquire, to replace reserves. So overall, what do we have? We have regular stocks, which, as we know, have become extremely expensive. So what makes sense? To start looking for value. An alternative to regular stocks, therefore, clearly is a diversified gold portfolio. As I mentioned earlier, large producers, Buffett bought Barrick back in July because it's big, it's healthy, it pays dividends, which he loves, of course, and it's extremely cheap. Barrick's PE right now is around 13. The S&P's average PE is around 37, so clearly extremely high, historically high. So the largest gold producer is trading for a PE that's about a third of the general market's PE. Now that's value and undervalued. Other than large producers, you can go for scale and growth. Mid-tier producers tend to have some great upside, especially if they're mispriced and undervalued, or if they promise very strong future growth. Royalty companies, of course, are a great option as well. They provide exposure with low risk. They can still provide great upside, especially in a rising gold environment. They benefit and leverage production growth as well as discovery through projects that they benefit from. You have optionality plays that are huge deposit that early in a bull market tend to be ignored because they are expensive to build. But as the gold price starts to rise, then they start to attract more attention as the bull market advances. You've also got developers who, in a bull market, their assets tend to grow. The rising gold price certainly makes the discovery of further ounces more valuable. And as the producers look to replace their depleted reserves, this is typically where they start to look at developers that have great projects, especially higher grade in good jurisdictions. And by investing in developers, you can certainly win either way, as their assets grow or as they perhaps become acquisition targets. Something to keep in mind is that silver tends to outperform gold in gold and silver bull markets. We've seen that multiple times in the past. Certainly it's more volatile than gold, but if we look at the peak in 1980, where gold reached its then all-time high, relatively silver's peak was a multiple of that. We saw that happen again in 2011. Gold peaked around $1,900, silver peaked around $49, and right now, here's where we can see, there's actually considerable opportunity. Gold's recent high of over $2,000 certainly has yet to be matched by silver. It has a lot of catching up to do, and there's some, as I say, some good opportunity there. So to recap, we've got gold and silver that remains still extremely undervalued. And so what should investors do? The approach we recommend is that the investor determines how much focus and risk they want to commit to investing and researching this space. They need to seek out quality information, look to build a portfolio that works for them, and then of course stick to their plan. Certainly, they should expect volatility and corrections, but given that we're in a clear rising environment, a clear bull market for gold and silver, what makes sense is to look at these corrections as buying opportunities. As we say, gold's in a bull market. Investors should ride it. To recap, I've been investing, researching, and writing about precious metals and mining for over 20 years. I write 2 newsletters about what I'm buying, what I'm selling, and I provide all my background research on metals and mining. Keep in mind that it's unbiased research. I'm not paid by any of the companies that I write about. So I encourage you to check these both out at goldresourceinvestor.com and silverstockinvestor.com. And I'd like to just remind everyone, gold's in a bull market. You should ride it. Thank you.
Thank you, Peter Kraut, editor of the Silver Stock Investor, also the Gold Resource Investor. Thanks for giving us the macro story here. Now it's a pleasure to turn to our host, Pascal Hamelin. Pascal is the president and the chief executive officer of BonTerra. He's a mining engineer by training, a member of the Order of Engineers of Quebec. He has 30 years of experience in mining operations and project management. It's been focused mainly in the Sudbury area as well as the Abitibi camps. In 2010, Mr. Hamelin joined Metanor Resources as the general manager of the Bachelor Mine and then moved up to vice president operations. Following the acquisition of Metanor by BonTerra, he became VP Operations for BonTerra. In July 2020, he was nominated by the board as interim CEO. And in November 2020, President and Chief Executive Officer. It's a real pleasure to turn the call over to Pascal.
Thank you, David, for inviting me. Thanks everyone for attending this presentation. It's with great pleasure that I'm introducing you to BonTerra Resources. We're developing the next gold camp in Quebec. We're in the Urban Berry camp, and we got a lot of good projects that I will go through. So there will be some.
I'm sorry, Pascal. Can you show your web camera?
Oh,
there we go. Thank you so much.
There you are.
Oh, so okay. All right. So Yeah, so there will be some forward-looking statement in this presentation. And all currencies are in Canadian dollars unless stated otherwise. Who we are, we're developing, again, we're developing gold projects in northern Quebec in the Abitibi Greenstone Belt. We got already 2.1 million ounces in a 43-101 report between the projects surrounding the Bachelor Mill. And we're in the middle of a very aggressive drill campaign. We're in the middle of right now of our winter campaign, which is going very well. We're halfway through it. The winter campaign is 63,000 meters, and we got around 30,000 left to go for this winter campaign. And what's the goal with this winter campaign? Well, it's to do a mineral resource estimate in the spring before the end of Q2. And that will be released, and then immediately after, we're going to do an economic evaluation, which will be released September, October of this year. So it's a very exciting year, a lot of stuff happening, you know, and it's going to be 2021 is going to be a very interesting year for BonTerra. Now, we're really at a discount rate right now. We're at $33 per ounces. We're compared to our peers in Canada, it's well over $100. And actually, we had an opportunistic bid this fall at $1.60. So, and we're trading right now at $1.20. We already have 2.1 million ounces. That was identified with close to 400,000 meter drilling. That was released in 2019. Right now, we already drilled over 100,000 meters since the last report, and we got another 30,000 to do before this spring. One other thing is we have assets, operating asset. We have the Bachelor Mill. The Bachelor Mill is operational, and it's just to turn it on. On top of that, we got 35,000 hectares of land in the urban berry camp and around the Bachelor Mill. So again, so if you look at us versus our peers, we're at $33, so lots of room to grow just to catch up with our peers, you know. So what's our plan? Again, we're drilling. We're in the middle of a 63,000 meter drill campaign, halfway through it. This spring, we're going to do the resource estimate for the 3 deposit, and then following that, we're going to do the PEA. The PEA, the idea of the PEA is to have the 3 deposit feeding a central mill. To do that, we're expanding the mill. We're doing the permitting process, so we're allowed to process 2,400 tons a day from the 3 deposit. Capital structure, 90 million shares outstanding right now, about 115 million market cap. Very strong shareholders supporting us, and you know, we got Wexford at 18%, followed by Kirkland Lake. All these investors are very supportive, and some of them even increased their position in the last financing. We just completed one in December, so we're well cashed up to proceed for to continue to complete the drill campaign, the other 30,000 meter, and to do the resource estimate and the PEA. The board of directors, there was some adjustment made in 2020, so we increased the directors from Quebec. Now half the board is from Quebec, which we feel is very important. The assets are here, the corporate office is here in Val-d'Or, so we got half the board are from Quebec. Also, Mathieu Epijac lives here in Val-d'Or He's the president of a regional airline, and he was born and raised in Waswanipi, which is the Cree First Nation within 35 kilometers from the Bachelor Mill. So Matthew knows the area very well. So where we are, Val-d'Or, you know Val-d'Or, it's 500 kilometers north of Montreal, but our projects are accessible by road, 3 hours away from Val-d'Or. They're all on the Abitibi Greenstone Belt, and like every deposit in this camp, they're associated with fault system. So you got the 3 projects here, Barrie, Gladiator, and our neighbor Windfall, sharing the same fault system, the Maasai fault. And up here, you got the Bachelor deposit, the Moroy deposit, 1 kilometer south of the Bachelor Mill. I'll get into that and close up. So the Bachelor Mill is on the highway. So it's on the power grid. It's already built. The tilling facility is already built. Everything's in place. The permitting that we're going through right now is to expand the capacity of the tilling facility and also to increase the daily output from the mill. Again, the Moroy deposit is accessible through the workings from the Bachelor mine. So on surface, there's no investment to make. It's all underground development. Barrie and Gladiator are accessible through gravel road, 110 kilometers from the Ville-sur-Quivillon and also from the Bachelor Mill. So the plan for the PEA is to truck the material over the life of mine of the 3 projects over to the Bachelor Mill. The Bachelor Mill, what's interesting for the Bachelor Mill is it's the only mill in the entire camp. There's nothing around. So anyone that wants to match us as far as asset and timeline, they're already 3 years behind. That's how long it takes to get your permit and build. Us, it's already there, it's already permitted, and all these other deposits, if they ever want to process gold one day, they're either going to have to talk to us or build their own mill. So what do we compare? You see, like if you look at the Canadian environment, we're relatively cheap, very cheap. We're at $33 per ounces. And if you look at what was the acquisition in the last, I'm not including QMX here because it's too fresh, but you look at the other company, you know, it was closer to $250 per ounces, and we're at $33. So there's like we're really, really, really undervalued. And if you look at our, you know, the largest of our 3 projects, the Gladiator deposit. The Gladiator deposit, when we did the 43-101 in 2019, we had about 200,000 meters drilled already on that deposit. If you look at our neighbors, Lamaque and Windfall and the Abitibi Greenstone Belt, Lamaque got sold, they had close to 400,000 meters drilled. And Windfall, they're already at 1.1 million meter drilled. And if you look at the, you know, the parameter of the deposit, we're very comparable to the others. So, you know, all we're going to do is add more drilling to this Gladiator deposit, and then the ounces are gonna go up, and that's what we're doing. Now a bit of geology here. So what you see, I'm going to show you where we're drilling. So the Barrie project, of course, we got 2. We're drilling. We got 2 drills at the Barrie project. We got 1 drill at Gladiator, 1 drill just north of Gladiator, what we call the Rivage Zone, which is a northern extension of the Gladiator deposit. And I also have a drill at Moss. Moss is on the same fault system as Windfall and Barry, as you see on this map. So we have a drill at Moss, 2 at Barry, 2 around Gladiator, and 2 others over at Moroy deposit. Now a closer look at Gladiator. This is what you see there is the longitudinal section of the deposit looking north. This is from the 43-101. So it's narrow vein structure, 1.5 to 2 meters, subvertical, and this is what we call the main zone. Now, we've been drilling since 2019. We've been drilling the north zone, which is a parallel structure to this one. And this summer, right now we're trying. We got one drilling over to the west on the Rivage zone, and we have one drilling at depth here. This summer, we're going to be drilling east over here, and we're going to have three drill rigs targeting this area this summer. Now, regionally, we have a lot more to discover just on the shear zone where the Gladiator deposit is located. This is not part of our 43-101. The 43-101 is only the red sector here, what we call the Gladiator deposit. The rest is to be drilled. So there's a lot more to discover in this camp. We're so early in the game. So right now we're still focusing on Barry and Gladiator and Moroy, but there's a lot more to drill. We'll get there eventually. Barry project. This is again a longitudinal view of the Barry project from the 2019 resource 43-101. Where we've been drilling since the last technical report is basically the extension. This summer we drill over to the west. Presently we're drilling the east side over here. We have 2 drill rigs targeting this sector here. And then eventually in the summer, then we're going to go back drilling at depth. But right now the focus is still shallow drilling above 600 meter, drilling to the east. A little bit of regional, well, it's extension of Barry. You see this Mazai fault, the black dash line. Originally, we thought this fault was right against the Barry deposit, but it's not. The detailed geophysics that we did in late 2019 showed us that the fault is a little bit further north, and there was room to hide some more structure, which we drilled this summer. We drilled in the summer 2020, and we released the results this fall over at Barry. So we got still have some assay pending here at Barry. And right now we're drilling the 2 drill rig I told you we're drilling to the east. It's over in this sector. So lots of room for Barry to grow also. Now Moroy, this is the infrastructure on surface. So the mill is right adjacent to the head frame. On this section view, you see the old bachelor working. There's still room. There's still room. Bachelor is not dead yet. We stopped the mining because we need to do more geology work, which we will. But right now the focus is over at Moroy because it's above shaft bottom. So the infrastructure is already accessible. So of course you're going to drill and extract the gold from this sector first before you go down at depth. So this is our focus right now is Moroy to the south. We already have access on level 11. We're 30 meters away from the deposit over at on level 14. We did the bulk sample over here in the fall 2020. We extracted 10,000 tons. We said that we were going to do the bulk sample in the second half of 2020, which we did, and we released the results. Now we're saying that we're doing the 63,000 meter drill campaign. We're already halfway through it, and we're going to do the resource. We're going to publish them before the end of Q2. Also, regionally, we also in 2019 we did the detailed geophysics around the bachelor camp, and we identified another cyanide intrusive over here. We call it the clone, and we're going to go back there. But right now the focus is on expanding the resource for this mineral resource estimate that we're doing in Q2. So, but eventually we're going to go back. There's a lot of targets to chase over in this camp as well. So to summarize, we're in an excellent camp. Quebec is a great place to drill. We have the diamond drillers in Val-d'Or. We have all the suppliers, a pool of geologists. We have a big land package, over 38,000 hectares. We already identified 2.1 million ounces. And that resource is going to grow because we're drilling and we know where we're drilling. We have a mill in the middle of the camp. It's already built. It's already permitted. And then we're getting the permit right now to increase that capacity even more so we can take Gladiator, Barry, and Moroy and feed that into a central mill. And again, I cannot repeat it more. Right now, it's a great time to come in. We're a really significant discount to our peers at $33. So, you know, with this, I'll hand over the mic to David for the question, the Q&A phase. Thanks.
Thank you, Pascal. Very well presented.
Thanks.
As always. We're going to start with Chesley Morton, top of our list. Chesley. Good to have you on the call. Chesley's unmuting. We'll see him there in a second.
There we go. I'm unmuted now. Thanks, David. Interesting presentation, but I'd like to participate a little later in the queue if I could.
Of course. Absolutely. Okay. We'll come back to you. Let's turn to Chuck Deeds. Hi, Chuck.
Hi,
welcome.
Thank you. Thanks, Pascal. Question. 2.1 million, you give us a comparison. I agree the valuations there, it's been somewhat surprising that the stock sat there so unattended, and not so sure what the reasons are for that. But 33, the value comparison is there at 33 an ounce. The question is, we've watched Pure Gold go on the development of their mine and the plan to get it, up and going. And the question I have is that, being that you had 2 million ounces of reserves proved out,
resource.
A resource, I should say that resource. Is that what we've got to wait for, is a more explicit, detailed evaluation before there's a plan to take this into mining? Because it seems like it's been a long wait.
No, I agree. And the PEA, like, I wish we could do the PEA in 2020, but the resource, we had too much drilling since 2019, so we couldn't take the resource from 2019 and do a PEA and release it to the market. There was too much drilling done since, so we got to do the resource update first. And the reason we didn't do the resource update in the fall 2020 is Barry and Gladiator, both of them, there's a lot of drilling that can be done in the winter months only. And we had to interrupt the drill campaign in March 2020 because of COVID. So the geologists, they asked me, says, Pascal, please give us a chance to go back, especially on the east end at Barry. Let us drill some more meter there, and then we'll do a resource estimate with even more information. So I agreed to that. So that's why we're going to do the resource estimate this spring, and then we're going to do the PEA in the fall. And then in parallel to that, we're still continuing the permitting process, and that was one of the other reasons why there was no rush to do the PEA this fall 2020, because you're still in the permitting process. And we completed the environmental impact study. We're in the Q&A phase right now with the Ministry of Environment. We answered the first series of questions in 2020. Now 2021, I'm very hopeful we'll get the permit in the fall, and then you could start. Berry's already permitted for extraction, so you could start with berry as soon as you get the permit for increasing the mill. Moroy, it needs a mining lease. So Moroy is outside the bachelor mining lease to be allowed to mine Moroy. The feasibility is required. So that's why you do the PEA and then you do the feasibility, then you go into production. You put your house, you start with the foundation first. It may be perceived as a long phase, but it's the right phase. You know, if like we have so many examples of project going fast, and then next thing you know, they fell off their bicycle or their bike, and then you know the investors, the shareholders are not too happy. So you got to do it in a progressive way, you know, and that's what we're doing.
Is there more, you know, because of this delay, or at least the inclination from the outside that it's not progressed fast, is that due to an inside desire to sell the project or develop it? Is there, you know, can there anything be termed from us looking at it as an investment standpoint? Sometimes you buy a value stock and you get stuck in it because it's not moving, or, you know, like this $1.60 offer that was made obviously wasn't enticing enough for the value of the asset that's there. Is there been any discussion about really what the corporate plan is? Is it to build this or is it to sell it?
It's to build. We're building, of course, but you know, there will be phase. So right now, we believe, the board and the management believe that a $1.60, it was opportunistic and it was too low. Plus, you know, this offer, although the offer was there, but how serious it was, we had 24 hours to react. It expired. The offer expired we received the offer on a Friday night, and the offer expired on Monday at 4. So we found a law firm, we found a financial advisor to advise us on Sunday night, you know, but they told us we're not ready to give you an opinion on this offer. So, and then it expired. Now, you know, if we would allow ourselves to look at it, maybe, you know, we could have discussed it further. Probably we would have still rejected, but at least we would have time to look at it. But this time it expired, so we moved on. But, you know, we believe we got, because we have the mill, we, like myself, I'm an engineer, you know, I've been building mines. So for me, this is building 3 projects, feeding a mill. It's going to generate cash for the shareholders. Now, if right now at $33, we feel it's very low. So, you know, like the offer would have to be significantly more, you know, but we believe that the PEA will give us the re-rating. So, and then if, you know, if we get another offer on the table with the PEA, and then we'll, of course, we'll assess the offer. But right now, we're focusing on building. So getting the resource out and getting the PEA out. We already have the consultant picked up. They're going to be independents. They're already on board. They already know on it. They're working on it right now with our geologists. And we also have another independent firm who's going to do the peer reviewing. So the process is well started, and we're definitely going to deliver before the end of Q2.
Okay, that's it. Thank you.
You're welcome, Chuck.
Thank you, Chuck, for all your questions. Greatly appreciated. We're going to turn to O&M's Doug Loud. Doug.
Hi, Pascal. Very interesting. Could you just touch a little bit on, and you've got permits for the mill at its current capacity, but if you wanted to make it bigger, would you need more permits? And what about permitting for all of the projects?
Okay, the mill is permitted for 800 tons a day for the bachelor material only. This the bachelor mill, that's the current permit. Now, the request we made to the Ministry of Environment is to be able to do custom milling. So to do a mill from various projects, so Gladiator, Barry, Moroy. And on top of that, because at 800 tons a day is going to be too small for when you got 3 deposits feeding 1 mill. So we request the authorization to increase the mill capacity to 2,400 tons a day.
Okay, can you, if you get that much bigger, is there anybody who wants to do some tolling with you?
I'll be open to discussion, of course, but the priority will be, of course, for a 3 deposit. Like,
Right. How long does that re-permitting take?
The permitting takes about 3 years. We started because you're going to do a full environmental impact study, which we did. We started in late 2017. We submitted the environmental impact in 2019. And the ministry, of course, the COVID slowed down a little bit the analysis from the Ministry of Environment, but they send us their questions in the summer 2020. No make or break there, you know, because now with they want to know how much what's going to be your carbon print. So that was not requested in 2018, but now the ministry wants that in 2020. So we did a small study for what's going to be the carbon print for this project, but it's minimal because the mill's on the power grid already. So it's not on diesel generator, and it's, you know, so it's the carbon footprint is going to be small, but we had to demonstrate it into a report, which we did.
Okay, great. Thank you very much.
My pleasure.
Thank you very much, Doug, as always. We've got Hal Dietrich's on the line with us. Hal, do you have a question today? Okay, let's try Henry Eversole. Henry, question today? Okay, let's go to Stratos Matalis. Stratos, question today. I know Stratos has a question.
Yes, hi. Thanks for the presentation. I was a shareholder of Metanor for quite a long time. And if I can remember, actually, there was a presentation I attended back in 2002. And as one of the panelists mentioned earlier on, it's been quite a long time for this project. It's been almost 20 years. I just want to ask you, I understand the PEA, it will be ready sometime later on this year. Can you give us an idea of the costs you expect, assuming that the resource, let's say with the current resource, I understand the resource is going to be, is going to change, is going to improve substantially. But let's assume you have the resource you got now. Just what do you think the costs are going to be? What the investment in order to get this into production?
Yeah, well, yeah, we do have internal numbers. It's I'm going to be very careful giving numbers because this is how you get shareholder disappointed. But I'll give you the ballpark range. Okay.
Yeah, that's what I want. Yeah.
Yeah. So Moroy is already developed. Okay, so you gotta put a raise and maybe an access on level 13 and level 8. The mill's already there. So Moroy on a standalone, you're looking at maximum 20 million. This is all Canadian dollars, okay?
Mm-hmm.
So you do your math for the US dollars. But the Barry deposit, it's underground development as well, so very minimal. You know, the rent's already done to level 100. So you just need to expand the rent down and put the vent raise, in second egress. So again, minimal investment, I would say at the most 25, Gladiator, a little bit more investment because the decline has to start from surface, but you got more ounces. So it balances out, probably maybe 40. 35, 40. And then the mill expansion, you know, all it needs is an increased grinding capacity and a second set of power line beside the existing one. So you're looking at anywhere between 50 and 60 million. So you're not looking at 400 million Canadian, not at all. It's less than 200 million.
Right, and do you think that the all-inclusive cost is going to be less than $1,000 per ounce?
The all-in, probably it's going to be in that range.
Okay, so yeah. Okay, fine. Another question. Can you just very briefly tell us the history of the mill? How you inherited the mill basically on your properties?
Well, it came from Metanor, from the acquisition of Metanor. Metanor operated that mill between, well, I was the manager back then. We operated the mill from 2012 till 2018, and the recovery was over 96.5%.
Right. And as far as the time going to production, if everything goes as planned and you increase the resource, when do you expect, let's say, to start production or commissioning?
That's a question for the Ministry of Environment. But let's say we get the permit in 2021. You know, construction and development is going to go quick, so late 2022.
Yeah. Yeah, that's fine. Thank you.
My pleasure.
Thank you, Stratus, for being on the call as always. We're going to turn to Victor Zhao. Victor, question today.
Yeah, hello. Good presentation. I think my question was answered. So just to confirm, so the production could be expected by the end of next year. I'm right?
If we get the permit this year.
Yeah, get permit, but you still need to get financing, do the real work. And I mean the production, real production could be next year.
So the PEA is this fall. Okay, so resource estimate this spring, the PEA this fall. I'm not going to start producing from a PEA. You and I have probably 20 examples of mining companies starting on a PEA. And some are lucky, they do well, but some others are not as lucky and they trip. So you're going to be careful. So the plan after the PEA is to do either the pre-feas or the feasibility. Now that's independent from the permitting. It's the key is to de-risk all these all these projects. They're not at the same level of risk. Because Moroy, we already did the bulk sample. Barry, we already extracted material on surface. You know, it's already been processed. We know how the rock behaves. You know, but they all need a feasibility study so we can show the market how much this is going to make money. So it could go quick. You know, 2022, but the PE will dictate that. But for sure, you're going to see a resource estimate this spring, which I think we're going to get re-rated. Right now, we're at $33 an ounce. I believe it's way too low, you know, for the number of ounces that we got. And we're in Quebec, you know, like this is a great jurisdiction. You know, you got you know, the rule of law. The law doesn't change. You know, no one's going to take your deposit away. If you granted the mining lease and if you behave as a good corporate citizen, you're gonna be allowed to produce from that deposit. So, and we're surrounded by good suppliers. You know, Val-d'Or is 3 hours away. So at $33, I believe there's a re-rating that needs to happen, you know. So the resource will do that, and also the PEA, and then we'll talk.
Okay, thank you.
Thank you, Victor, and a very good, great answer, Pascal. Really forthcoming. Let's go to Chesley Morton.
With regard to the mill expansion, I think you mentioned 3x from 8 to 24, and you said it would be probably a 3-year permitting process. I guess in addition to that, there's probably additional permits for tailings and that sort of thing, and not required. Good. And then
it's part of it, Chesley.
Okay.
And that 3-year process began in 2018.
Okay.
So it's not 3 years from now. It's 3 years from 2018.
So you're right there, actually, right in the middle of that.
Exactly.
And then the cost is already factored into everything presented then?
You mean the cost of the mill?
The cost of the expansion, yeah.
It's going to be part of the PEA.
Okay, well, that's perfect then.
And that mill is operational. This fall, we process at 800 tons a day. We process the material from Moroy. We received the green light from the Ministry of Natural Resources to process 10,000 tons of material, which we did. We completed that in October, November.
Okay, that's perfect. And I should also pass along that one of your loyal shareholders, George Moore at our firm in Atlanta, was unable to join us, but wanted to extend his best. So
Okay,
thank you.
Thank you, Chesley. Greatly appreciated your time being here on this call today. Let us turn to Scott. Scott, we've got a few questions from the audience before we proceed to close.
Yes, we do. In fact, there were a few questions about your valuation, which I think you answered. Basically, the $33 an ounce valuation will be re-rated after your resource estimate and PFS. Is that correct?
Well,
that's your opinion?
That's my opinion. But the people that come in now, you know, they will get the reward. You know, if you wait after the resource estimate, well, it might the re-rating might be already behind us. You know, but right now we're at $33, and what I'm saying is, if you look at our peers, you know, like I'm not talking about companies in Congo, you know, I'm talking, they're all in Canada, you know. Radisson, like they're here on the Cadillac Fault, they're close to $100. Battle North, over $100, you know. Osisko Mining, Osisko is our neighbor at Windfall, like Windfall and Barry and Gladiator on the same camp, they're close to $200. So that's why I say we got lots of room to go up.
Great, thank you. I have a couple questions about the mill. First one is, have you received any interest from other mining companies near you about the mill? If they were interested, when would they be able to utilize it?
Well, if it would be all incorporated in confidentiality agreement. I can tell you we had interest in the past. We may have interest today, but I cannot disclose that. But the permitting to expand, it could be in 2021. And then the expansion, you cannot expand before you get the permit. So once you get your permit, it will probably be about 6 months to a year for the expansion. But the beauty with this is you can process the 800 tons a day is still functional. So while you're building the additional capacity beside it, you can still process material at 800 tons a day to start with.
Great, thank you. Next question about the mill is, what is the road logistics to get from the Gladiator and Berry projects to the Bachelor mill? Can you please speak to the economics of trucking ore over 100 kilometers to the mill?
Those are roads used by the forestry industry. You're not going up the Rockies and down the mountains. It's fairly flat. You know, you're in the Abitibi Greenstone. People that came here, they know how relatively we're flat. So it's not a big issue for trucks. Those roads are already built. They're already being used by the logging industry. And trust me, the logging industry has been living with tight margin for the last 30 years, 40 years. So the trucking cost is something you gotta, when you look at trucking costs, you gotta compare with the loggers. The loggers know how to haul material at a cheap cost. And to me, it's less than 20 cents per ton.
Okay, great, thank you.
Per kilometer. So over 110 kilometers, you're looking at between $15 and $20 Canadian, depending on fuel costs.
Perfect, thank you. The next question is, could you provide further detail on the opportunistic bid you referenced? That is, who made the bid and why?
Well, first, it was, well, there's a lot of things we cannot disclose here. What we're allowed to disclose is that we receive an offer. It was an all-share offer, so it tells you it's a public listed company. But I won't disclose who it was. It was at the time of their share value. It was, you know, if you look at the factors, it was the equivalent of $1.60. And we received a call on a Friday night, and we had Monday until 4 o'clock to make up our mind. And we couldn't make up our mind within 24 hours. So the offer expired and we never heard back from them. Now I say opportunistic because they knew that we were in the middle of a capital raise. Like they know how much it costs to explore. They know we're very active, and they knew that the last financing was August 2019. So they knew that we were about to raise capital, and it came with an offer. So to me, it was opportunistic.
Understood. Okay, yeah. Next question is, would you please talk a little bit about the history of the company? It seems that there has been considerable turnover of management.
Yeah, that's a fact. And that's maybe one of the reasons we made in the, like I like to say, in the dugouts, you know, at $33. The previous people made commitment that maybe they didn't know, you know, you stretch a little bit your story, you know. But I'm not saying that these deposit won't get to 5 million ounces. But if you say you're going to have 5 million ounces in 2018, and then you issue a resource at 2.1, well, you may get disappointment in your shareholders. But, you know, we're still early in the game. So there will be more drilling. We're doing that right now. And I believe the resource is going to go up. But, you know, when you try to put the cart in front of the horse, that's what sometimes happen, you know, management leave. So now it's all behind us. You know, we've got a fresh board. We know what we want. We got alignment within the board. We know that the key is to get the resource and the PEA, and we're going to do that through drilling, you know, and after the PEA, then we'll assess the value again.
Thank you. That's a good answer.
Hey, Pascal, we should never forget we've come through a pretty difficult period over the last 6 years in mining. So your timing of what you're doing right now certainly is the time to be doing this. Yeah.
Yeah, and maybe we're lagging a little bit behind our peers on the drilling. You know, I don't have a 1 million meter drilled already. you know, but we know where we're drilling and we're hitting. And that's why we're going to do the resource update and the PEA.
Yes, and you have a reputation, Pascal, for telling it like it is, and it's always appreciated.
I think that's what the shareholder wants, and that's what the investor wants to hear.
Yep, no question. Scott, any further questions?
I have two more quickly. You mentioned, someone said that you mentioned in a previous presentation that one of the deposits is under a lake. Are there any issues with that permit-wise?
No, the deposit is on the ground. So in Canada, there's deposits that were actually, they were lake. You put dikes and then you divert the water from within the near your mineral zone. That was done in other jurisdiction. It can be done here. You got to be transparent with the First Nation and the society, and you're going to do the economics. If you're not allowed to mine near surface because there's a lake, well, then you leave a crown pillar on surface, you know, the 0.50 meter or 0.100 meter, and you mine everything below. There's no issue.
Okay.
You know, we're like Quebec, like out there, you find a deposit away from a lake. Like there's lakes everywhere. Eleanor mine is operating the Eleanor mine right on the shore of a Hydro-Quebec reservoir, you know.
Yep, great, thank you. And final question from the audience, do you have any royalties attached to any of the properties?
Yes. It ranged from 1% to 4%. Sandstorm has one at 3.9 that can be brought down to 1.8%, for $2 million. But there's no more stream. This is gone. The stream era is gone.
Great, thank you so much. That's the final question from the audience.
Very good, Scott. Thanks.
Well run, Scott. Great call. Appreciate everybody's attendance today. And I'm going to turn the call back to Pascal for closing remarks.
Thank you, David. So again, thanks for inviting me this afternoon in this webinar. Again, BonTerra, it's a significant discount to our peers in the camp and the Abitibi Greenstone. We're at $33 an ounce, where our peers are over $100. We're drilling. We're in the middle of a big drill campaign. You know, we're already drilled over 30,000 meters this winter since November. We're going to do the resource estimate before the end of Q2. It's going to be released. And then we're going to do the PEA Q3, Q4, or September, October. So you got my word, the mineral resource in June. And from that, oh, and don't forget, we have, like, there was a lot of questions about that mill. So when it's time to process material, you're not going to see a major capital to process because we already have the mill in place. So thank you, David, again for inviting me.
Thank you, Pascal, for sharing all this information today with everyone. I want to wish everyone a pleasant evening. Thanks again for attending, and all the best. And thanks, Pascal, for presenting, and wish everyone well today. Take care.
Thank you.